This cheat sheet right over here is going to really help you succeed in crypto in 2024, because we're going to be talking about 2016, the 2020 and 2024 cycles, while also covering some really key metrics from the 2012 cycle. And you'll be surprised to see how all of these things come down to these phases in the halving cycle that you really need to know about in a lot of detail. So subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive into this cheat sheet that's going to help you this year and beyond. So let's dive right in, because we are firmly in the pre-halving phase, and historically you always see a pre-halving phase take place. Even 2020, after that crash took place, we saw multiple weeks of upside going into the halving event. 2016 was no different. These pre-halving phases tend to occur approximately 2 months before the halving event, and 2012 as well. This pre-halving rally actually occurred a little bit earlier, but generally we talk about this more in the newsletter, where this pre-halving rally took place a bit earlier, and the pre-halving retrace took place earlier as well, because this was a little bit more of a translated cycle where things occurred a little bit earlier. But that pre-halving rally is a historical tendency nonetheless. Typically 2 months before the halving, a little bit earlier if you're looking at 2012. But the last pre-halving retrace, that tends to occur a few weeks before the halving event. This is also a historical staple in cycles when it comes to Bitcoin. 2020 saw a minus 19% pullback. In 2016, we saw a 29% pullback. And if you actually want to take into account this downside wick right over here, that's 40% in general. But also 2012 saw a 27% retracement. So when you talk about 2012 being over 10 years ago, and probably not really a good data point to be taking into account when we're talking about these cycles, just notice how the pre-halving retrace, first of all, it does occur, and secondly, it's very similar to the 2016 retrace of 29% if you're discounting that downside wick and being a bit more conservative. So a pre-halving retrace has occurred not once, not twice, but 3 times. 3 times in the past. 27%, 28% really in 2012, 9 to 40% in 2016, and 20% in 2020. So we've covered the pre-halving rally, we've covered the last pre-halving retrace, and bear in mind that the last pre-halving retrace really is that final bargain buying opportunity. So whatever downside we see here, and historically it should be 20 to 30%, and if you want to be even more conservative, consider 15%. We only saw an 18% pullback this past January, so don't think we're not going to see a pullback. Many people get caught up in the euphoria of an uninterrupted uptrend that we see and are seeing right now. Last week we even saw a minus 4% dip, and many people thought about things a bit differently. They thought that we were going to really start crashing because we've gone up too much and it was unsustainable. So the narrative really shifts as price shifts. So historically, pre-halving retrace probably down the line a few weeks before the halving event. But what about the post-halving reaccumulation phase? Because it's equally important. This pre-halving retrace tends to set up this post-halving reaccumulation range, and it tends to last a few months. And you can see how the top for the pre-halving local top, and then the conservative bottom, these 2 data points form the post-halving reaccumulation range. And if you want to be taking into account that downside wick, most people don't really like taking it into account, but nonetheless really important to still factor it into our analysis, because it's an additional 10% downside that we may be missing if we just remove it as an extreme and an outlier essentially. So let's take it into account, generally speaking. Nonetheless, these 2 data points, the pre-halving local top and the post-halving pre-halving retrace. So the pre-halving retrace occurs before the halving, continues into the halving, and ends after it. So that retrace here, the bottom of it, that's going to be the range low. As you can see, the range low of this reaccumulation range, and the range high of this reaccumulation range is going to be the pre-halving local top. And historically, we've seen this even in 2012. This range high resistance rejects price into this range low here. So essentially, this here is very nicely and neatly depicted by this 27% retrace. Reaccumulation developed a little bit before the halving. So just as we were talking about earlier, this 2012 cycle seemed to be a little bit displaced to the left-hand side. Now we're seeing that this reaccumulation range tends to occur after the halving event, but it's the same principle. Because after we've local topped, we then pull back. So have a look here, range high resistance rejects price into the range low, and then we consolidate here until we finally break this range high resistance, turn it into support right over here, and rally into that parabolic upside. So same thing really in 2016. Notice how we reject from the pre-halving local top, range low rebound, and then manage to retest it as a new support, and then rally to that parabolic phase of the cycle. And notice how 2012, or at least 2020, is no different. Pre-halving retrace right over here, we get this range high reaccumulation and this range low, but notice how this reaccumulation range then transitions into this reaccumulation range, with the top of this reaccumulation range being a support in this reaccumulation range. So we have two micro reaccumulation ranges, and if you want to just lump these two together, then you can see that this is generally your sideways movement after the halving. So that tends to be, at least in later cycles, several weeks to a few months long in terms of reaccumulation. And so what if we could see the same thing happen after this pre-halving rally and also pre-halving retrace? That post-halving reaccumulation is going to be one of those final opportunities to really just accumulate on the pullback and add to a real fantastic opportunity, because on this pullback in the pre-halving retrace followed by consolidation, that's going to give us a lot of time to be just dollar cost averaging within this range before we really take off in what is the final part of this phase in the Bitcoin halving cycle, the post-halving parabolic uptrend phase. You can see that this really does take off with a breakout from the reaccumulation phase. Just look here how that breakout occurs. We get a retest of the reaccumulation range and then upside. And same thing here, reaccumulation range forms, retest, and then parabolic upside. So if we're looking at this phase, that's going to happen several months after the halving, but we still have technically a handful, less than a handful of opportunities to dollar cost average on a pullback, whether it's the pre-halving retrace or in a consolidation reaccumulation range, which will be after the halving. So around the halving event and several weeks to a few months after the halving, this is going to be that golden pocket for reaccumulation and dollar cost averaging, because that's going to be the time to really be adding to those positions, because we now know, and we know this very clearly for a while now, that Bitcoin has been proving itself time and again with reaccumulation, breakouts, reaccumulation, breakouts, reaccumulation, breakouts, reaccumulation, and breakouts. We're in a confirmed uptrend. And if we do get that opportunity for some sort of downside, some sort of sideways price action, really important to take advantage of those opportunities, because they do proceed further upside. And the thing about these reaccumulation ranges is that they really did proceed fantastic breakout movements, as you can see here. But when we break out from the reaccumulation range, we're going to get suddenly massive acceleration, and parabolic price action, which will simply be much better than these breakout moves. So if these breakout moves were impressive and you enjoyed them quite a lot, wait till you see a parabolic breakout which simply doesn't stop and offers very little opportunity to buy into the uptrend via very shallow dips that are very short-lived and proceed further upside to new all-time highs and price discovery as Bitcoin searches for newer and newer and newer all-time highs to simply finally top out in the bull market before entering that bear market downtrend. In any case, many phases still yet to be enjoyed. The pre-halving rally is in full force, but we must not lose sight of what's still ahead, and this is your Bitcoin cheat sheet for 2024. Thank you so much for watching. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy videos like these going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.